Hey traders, I just want to bring your attention to AUDCAD on the weekly time frame. Now, I know we've talked about this for a long time, but we are approaching that all-important level just below 0.9200. And as you can see here, we have not been below this level since July 2010. So it's a level that's held for coming on to almost 9 years. So bearing that in mind, as you can see, during that 9-year time, we've had, or almost 9 years, should I say, we've had two tests, 1, 2. Now, if you look at these tests, they have been pretty quick and ephemeral, and we can see that price on both occasions has immediately shot up and that the bulls have been proven to be there. Now, will that happen again? That's yet to be seen. However, we do have good recurring nuances that suggest that this is likely. Also, the fact that we do have a correlation or confluence, dare I say, of ABCD patterns coming into the level. Like we've got an A, B, C, potentially D here. If we get our Fibonacci extension out, we plot from point B to point A, we can see that we've got the 1.618 extension just below the level. That's absolutely fine. We also got an A, B, C, D pattern there, so we'll take out our Fibonacci extension, take it from point B to point A, and we can see that the 1.618 is actually on the level. Fantastic. So now we go down to the daily time frame and see if there are any other clues for us. Bear in mind that point D of A, B, C, D patterns are typically reversal points, and when we get this correlation with a level as strong as this one, then it could potentially be a fantastic buy opportunity for us. So let's go down to the daily and see if we've got any more clues. There we go. We've got potentially another A, B, C, D pattern. We haven't had D yet. We need to plot where that could potentially be. So we'll take the Fibonacci extension again from point B to point A, and we'll see where the 1.618 level goes. Okay, down here, just at 0.9123. So we have a confluence here of Fibonacci levels. We've got Fibonacci extension, should I say, and the D points of 3 ABCD patterns. There we go, 1 on the level and 2 just below it. So given that we've had 2 previous tests on this horizontal level that have caused the market to shot up afterwards, and the fact that we've got price hurtling towards it right now, indicates that this could potentially be a very good buy opportunity, a long-term buy opportunity, dare I say. Please bear in mind we're trading the weekly time frame, and this, given this last test on this level, we tested it in 2015, and it took about, well, let's just say 2015, it took about, well, 4 months to get anywhere meaningful, i.e. the top quartile of this range. Obviously, reversals are far higher in risk than trend-based plays, so please bear that in mind. This is a high-risk play. But what supply and demand traders will typically do in this instance is have an order on the level, so here round about 0.9176, and their stop loss will depend on their risk appetite. So if they want to play it safe, they will have a much bigger stop loss, much wider stop loss around about here. If they wanted to be aggressive, they would have a much smaller stop loss. I would recommend having a slightly safer stop loss and a bigger distance between your entry price and your stop, purely because we can and do get false breakouts. So I would, if it was me, put my stop loss round about here, just below where we have all 3 Fibonacci 1.618 extensions, okay, well below it. Please remember that the reward risk is still pretty damn good. So if we have our profit shooter and we project, okay, our stop loss will be here. If we project our target, this is an easy, if we're targeting the midpoint, it will be an easy 5-to-1 reward risk trade. So if we're risking 2%, that will be 10% potential gain. And if we are looking to essentially take it all the way up, then that will be an easy 10.37 to 1 reward risk trade, or 20.6% if we're risking 2%. Please bear in mind that the bigger the reward risk, the less likely price is to get all the way up there. I would, if I was in this trade, certainly look at scaling out if as and when I get a 1-to-1. So if I've say got a distance of say 200 pips between my entry price and stop loss, then I would sell half the position after I've made 200 pips and just set and forget and scale out at the midpoint, move my stop loss accordingly, and anticipate a movement to the upside. Please bear in mind as well, there are other entries you might wish to take, safer entries as well. I've just gone through the most aggressive one possible with the order on the level. You'll be the first people there in terms of a high risk trade. You'll be in the trade before the market's actually turned decisively. You may wish for a price action based bullish pin bar reversal on the daily or the weekly time frame. That could be a second entry, or indeed a higher low if as and when price has turned around. If you're triggered into the trade and the market or AUDCAD, the Aussie CAD closes below this horizontal level, that's a warning sign. If we get the next bar which takes out the low of the bar which closes below the level, then that's a sign to get out. That's our avert warning. Okay, so that is what's going on with Aussie CAD.